Welcome today. My name is Randy Cochrane, and I am the National Director of Growth and Development with Equity Real Estate. And Equity Real Estate is an independent real estate company for those of you that are not familiar with us. We're currently in 26 states. We're growing throughout the country. And we do a couple of these webinars every single month to help our agents grow their business. But it's just not about our agents, it's about all the agents. So we're going to be sharing some valuable information with you today. Make sure that you have a pen and notepad close by and take some good notes as we go along. We are going to record this. We'll also upload this to our YouTube channel so that you could go back and re-watch it, or for those individuals that registered but weren't able to make it, they can go see it as well. Today, what we're doing is we're talking about how to list and sell REO and bank properties. And when I started in real estate in December of 2000, bank-owned properties and REOs were a market niche, and a lot of people that or agents that were selling bank-owns and REOs really didn't want to tell anybody how they got those accounts. It was kind of like this secret. And so I'm gonna pull back the curtain today, and I'm gonna just share with everybody exactly what our team did to go out and get bank and REO listings. Now, bank and REO listing properties is really a niche market, and because it's a niche market, this pillar of income or source of income for your real estate business is going to come and go. So we went out, we got a lot of the bank accounts. We were listing and selling bank foreclosures for banks, and then the real estate market started doing this in 2005, 6, and 7. And in our market, the bank-owned properties just went away because all those individuals that were in trouble financially were just able to list their homes on the market. They had equity or they could break even and got out. And then, of course, we had that real estate bubble burst in 2008, 9, and 10, where we had a ton of short sales. Some REO and foreclosure properties came back. But then again, after 2012, 13, and 14, when our market went like this again, they kind of disappeared. We're always going to have them because unfortunately there's individuals that are going to get into some type of trouble financially, whether it's debt, whether it's divorce, whether it's death, whether it's a loss of job. And unfortunately, they're going to be in a position where they can't make their mortgage payment, they can't pay their taxes, they cannot pay their utilities, they can't maintain their properties. And so some individuals are going to lose their properties or give them back to the bank and do what's called a deed in lieu of foreclosure. And so what we're going to be doing today is we're going to pull back the curtain, and I'm going to show you exactly what we did to get these bank-owned properties and these accounts. Now, the market for REO opportunities is different right now than it's been before because unfortunately, we're having some natural disasters in the last 36 months. We've had some storms on the East Coast, particularly in Florida, a couple of years ago with a couple of hurricanes. Then we've had some flooding in Florida, North Carolina, South Carolina, Georgia, some parts of Tennessee, also that Louisiana area. And then, of course, we're dealing with fires right now in California. And there's going to be some opportunity for bank and REO listings in the future. And this is something that you need to start planting seeds for now and start marketing for, because it takes a little bit of time. And we want you to make sure that you know how to identify these REO opportunities. So the first thing that you're going to be doing to identify some opportunities, and even though some of this information is in the slide presentation, make sure that you're taking notes, because I'm going to be giving you a couple other websites and things that you can do that are tips and tricks to get these opportunities from our experience. So first of all, search online for banks with high foreclosure inventories. And a lot of the banks are going to be the bigger banks, of course, because they're doing more loans. Of course, they might not be servicing the loans, but they initially did the loan. Also, there's companies out there like Asset Link, Chrono Solutions, and Clear Capital that do REO management services. And these REO management service companies, they're the ones oftentimes because they're the servicer, they're the one that knows that the loan is in default. They're the ones that are ordering the broker price opinions or the appraisals. They're also the ones that are starting the foreclosure process with the foreclosure attorneys. Those attorneys are sending out and those mortgage companies are sending out the letters of intent to accelerate, the notice of defaults, the lis pendens. They're going through that whole foreclosure process. And so the client definitely knows that there are, um, that they are having a problem because everybody's reaching out to them. We always joke around that if you don't ever think that somebody loves you or is paying attention to you, just stop making your mortgage payment because your phone will blow up. But it's not going to be a fun phone call. Also, you can use online resources like the HUD Home Store for government foreclosed properties listed by HUD. You can also go to Fannie Mae's Home Pass solution online. And then you can also go to auction websites like auction.com and Realty Track. Now, when you start to develop an REO business, you're going to start to develop relationships with bank representatives, title companies, mortgage lenders, and attorneys. And once you start developing these relationships, some of them can be local, but also some of them are going to be nationwide. And the more relationships that you develop, the more it's going to benefit your business, not just from a bank and REO standpoint, but even if you're participating in short sales, because there are a lot of short sales coming back into the market space. Now, there are real estate industry groups or association that you can join to get access to REO properties. And one of those in particular is the National REO Brokers Association. That's nrba.com. And you can go there and you can join that association. Also, there is a another website that you can go to that's reonetwork.com to also get access to these industry experts and associations. Now we still have people joining our web meeting, so I'm going to go ahead and let them in. So thanks for being patient for just a second. Now, when you're building connections, one of the things that you're going to want to do is attend foreclosure and REO related conferences or workshops. Now, when we first moved into the market space for bank owns and REOs, one of the first things that we did was we started going to these conferences and events. And looking back, we do the math on everything to see what our return on investment is. And we had invested not just time, but money. It was around $18,000 fumbling our way through figuring out how to get an REO listing because we didn't know where to go and what to do. And so we're going to save you a bunch of time and money today because we're just going to basically send you to the sources that we had to figure out and learn. So some of those conferences, and one that's really, really good is called the 5-Star Conference. And you can go to 5starconference.com and learn more about their upcoming conference that's coming up. And go and learn and meet the banks, the servicing companies, and start to network. Also, you can use LinkedIn to connect with asset managers and REO departments with major banks because they're typically listed there. And then also start to collaborate with the existing REO agents that are in your market space to really start learning the ropes because we can see who all of the agents are that are listing the properties. For example, we have the Fannie Mae account in our office, and we have one branch of our company that specifically focuses on bank owns and REOs, and they're a wealth of knowledge and resource. But because they're also listing a lot of bank properties, it's great for us that are working with investors because we know that their properties are coming and we can watch for them. Also, you want to start to position yourself as an expert in this market space. So there's some things that you can do to do that. One of the things that you can do is you can get your certified distressed property expert designation. You can also get your your short sale foreclosure resource designation with the National Association of Realtors, and start to really position yourself as an expert in the short sale bank REO foreclosure arena or market space. Also, start to create content on blog posts and videos and showcase your knowledge in the default and REO process, and really talk to property owners about what to do that are facing foreclosure. Anytime that we see somebody that's a pre-foreclosure, a notice of default, and we get that list in particular from Red X, and we can go in and we can see who all the pre-foreclosures are. We reach out to these property owners that have already received their notice of default to let them know that we're not with the bank, that we are there to help them. Whether we end up listing the property or not, it doesn't matter. We're just a homeowner advocate, and we want to become their trusted advisor, because if they're looking to save their home, we can definitely share with them up to 9 different alternatives to keep their home from going to foreclosure. And some of those alternatives may still be available out of the 9, but usually if somebody's received a notice of default on their property, there's only 2 or 3 out of those 9 options left. And what that means is they are going to have to take massive action and work with you. Because one thing that you need to remember when we're working with these pre-foreclosures and bank-owned and REO properties is, as agents, time is always on our side. But time is never on the side of the property owner. And the reason why is, if they haven't made their mortgage payment, if they haven't made their taxes, if they're behind on their HOA, somebody is going to start that foreclosure process. And so for the property owner, the clock is literally ticking all the time. And so by becoming an expert in this arena, it's going to separate you from the other agents and the competition in your market area, because this is a niche market. Now, when you're listing REO properties and bank-owned properties, you're still going to be using the multiple listing service. There's other online platforms, oftentimes, that the bank or the servicer is also having you use that are specific for them. But we can still use platforms like Realtor.com, Zillow, Redfin, and then our industry-specific websites for our real estate companies. And then for marketing strategies, this is a lot of times going to be up to the bank or the lender, and you still want to really highlight the property, even though it might not be in the best condition. So still get those professional photos, still do the virtual tours, still do compelling descriptions, and you still might want to hold open houses at the bank-owned property during the listing period. We had one property in particular that I'll never forget that was in pre-foreclosure. We were going through a short sale process, and the foundation of the property, it was built on a ridge, and the property had started sloughing off the hillside. And literally, if you walked in the front door and set a bowling ball on the ground, it would roll out the back door. And the property owner was in the military. They were deployed. They had no intention of reclaiming the property. And because that property was, even though it was pending contract, working through that short sale REO process, because if it didn't get approved, it was going to become a bank-owned property. Because of the way it was priced, it was literally like the parade of homes, and we could just go sit out there every day, all day long, and get 5 to 10 people that would want to come and look at it, even though it had a structural issue. And of course, because it did have a structural issue, we went and got 3 contractor bids and submitted those to the bank, because the bank definitely did not want that property back. Now, as you start to collaborate with other specialists in the market area, what's going to happen is you're going to start to develop relationships. And with a lot of these relationships that you're going to develop, it's going to be with other competitors in your market space. And we're going to talk about the pros and cons of listing REO properties here in just a few minutes. But you want to be collaborating with the other agents in the market, because at one point in time, you may be getting a listing that they had, or they might be getting a listing that you've had, because for one reason or another didn't sell. Also, you need to have as your power team member, you need to have contractors in your back pocket, because a lot of these lenders or banks are going to require contractor bids in the pre-listing process. They may also be having you do what's called a broker price opinion, or a BPO, and submitting that to the bank. And when you list these properties, oftentimes you're going to be responsible as the agent for keeping the utilities on. You may be also paying for repairs to the property to get it sale ready. And at the same time, you might also have to have a reserve account with that particular lender or bank so that they know that you have the funds to maintain the property while it's going through the REO process. Now, when you're negotiating these transactions, REO properties really require a strategic approach. And the reason why is a lot of these banks or lenders have very specific guidelines, especially if it's a Fannie Freddie property and they're only going to accept a certain amount of their appraisal price or their BPO price. And the banks are looking for offers that are very, very clean. Typically, they're not going to be giving closing costs. They're not going to be paying for home warranties. They're not going to be contributing in any form. And oftentimes, a lot of these properties are so distressed that your buyer has no choice other than to literally pay with their own funds and not get a loan or go out and find a strategic money partner or a money lender that's willing to lend on a property that's not in a livable condition. And typically, when a bank goes on the market, they are looking for a full price offer in the first 30 to 60 days. They might not adjust the price depending on their process and their requirements or guidelines. They may be doing a new BPO or a new appraisal every 90 to 180 days and then adjusting the price. And they still may consider those low offers. They still may counter offer back just like any other transactions. But if you know that you have a property that has structural issues, you have something that is stigmatizing the property, like meth contamination or things like that, you definitely want to keep the bank in the loop and let them know, because again, that's maybe something that you might have to do some remediation on. So uh, we always want to emphasize quick closings because they appeal to the banks, but oftentimes be prepared for contingencies like inspections or legal clearances or other issues with title that may slow the negotiation process down. I'll never forget, we had listed a bank-owned property. The bank had priced the property at a reasonable price, and we held the property open so that everybody could get in there. And we gave everybody 36 hours to bring their contractor in, submit their highest and best offer. And then what we were going to do is submit the highest and best offer to the bank because they only wanted to look at one. They didn't want to look at every single offer. They just wanted to look at the offer that was the highest price with the least amount of contingencies. I will share with everybody the buyer that won that offer. When they wrote their offer, their earnest money, because they had already been in the home, their contractor had already looked at it, their earnest money was equal to the purchase price, and they had already escrowed that with the bank's title company when they submitted their offer. And the only contingency in that transaction was clear title. And so it's very, very, even though it wasn't the highest price, it was the best transaction. It was the best offer because like it was cash and the money was already at the title company. And so even though it wasn't the highest price, that buyer won that offer with that bank. And that's a pretty bold move to have an earnest money amount equal to a purchase price. I just gave everybody a little bit of a negotiation strategy there for your investor buyers. Challenges in today's REO transactions. REOs are neglected during the foreclosure process. Oftentimes you're going to see where unfortunately the property owner, a tenant, doesn't take care of the property on the way out the door. They do damage. And also right now, if they're a vacant property, if you're in an area like we are where we've been in single digit temperatures during the nights, the last few nights, if the property's vacant, we are literally going out to every single one of our vacant properties right now and just simply checking on it to make sure that we don't have broken pipes. So, of course, anytime you have water in a property, that can lead to mold. And of course, we always have that challenge with vandalism or people breaking in and squatting in the properties. You want to always provide your potential buyers with realistic estimates for repairs right up front, if you know what those are. One of the things that I really like about HUD homes, for example, is prior to the property going on the market, HUD will send in a HUD appraiser and inspector. They will do a inspection on the property. They will post that inspection. And so even though sometimes we can't, turn on the utilities and the water and the power and all these things, we still have a really, really good idea about the condition of the property and the things that might need to be done. Because remember, if you're listing these properties as an REO agent, oftentimes, we're able to also bring the buyer or have a list of buyers. Also, with these transactions, we have lengthy timelines. Banks might take weeks to review offers or respond to contingencies. We know our buyers, especially if this is a good deal, they're going to write their offer. They want the bank to respond in 24 to 48 hours. The banks don't care. You have to remember the golden rule, the one with the gold makes the rules. And then in this case, it's the banks and the servicing companies. And so they may take 2 or 3 or 4 weeks to go through the process, run their numbers, make sure that it's within their guidelines, and then say yes or no. And of course, you might get a counter offer back. You need to set expectations early and often with your buyers and keep the communication clear throughout the process. Also do that with your buyers agents that are on the other side of these transactions. Of course, a bank may be willing to offer compensation to an agent that's writing an offer on these properties. That can be negotiated. Sometimes it may be beneficial to your buyer to compensate the buyer's agent, not even ask the lender for compensation. That could make their offer a much stronger offer to the lender. And we have a lot of competition on these bank-owned properties, especially if they're priced well. And we always encourage our buyers to submit their highest and best offer, and oftentimes consider an escalation clause, because your buyer, especially if you're representing a buyer on a bank-owned property, they may only get one shot. And so if you know that you only get one shot and it's going to be a half court shot, you better take your best one, because there might not be a second opportunity. Now, these are the pros and cons to REO properties as a listing agent. First of all, the pros, oftentimes the bank is going to have a lower price on the property because they know what's wrong with the property, even though they've never lived in it. There's been an inspection, there's been an appraisal, there's been a BPO that's been done. They can see the photos, and a lot of these banks and lenders, they just want to move their inventory. This is the most unemotional sale in real estate, because the person that's making the decision at the bank is just simply looking at the numbers. And a lot of these properties are going to have mortgage insurance in some form. So as long as the offer meets the lender's guidelines, they're going to sell the property. They're still going to file their insurance claim. They're still going to be made whole on their loan anyway. Also, the pros to these properties is they have great investment potential. So you can come in and fix up the property and resell it. You could also fix up the property and rent it. And there's just some great opportunity here with these types of properties in the market space for our clients. Also, market availability is definitely going to vary. REOs are going to be available in various price ranges, and they're going to appeal to a very broad audience. I'll never forget, we received an REO listing once, and it was a condominium, and literally our REO listing price from the bank back in the early 2000s was under $40,000. That same condominium today would sell for over $300,000 in our market space, but it was a very, very inexpensive property. The compensation was not very high, but of course it did bring a lot of buyers our way. And then ironically, in that same week, we received another REO listing from that exact same lender that was a 7-figure property, and it was a luxury home. So it's pot luck. You're going to get what you're going to get. And you just have to remember, once you're with a bank and they send you a property, don't say no. Because as soon as you say no, you might not be on their list any longer. So you have to take the good stuff with the bad stuff. Also, with these lenders, the negotiations get very simple. Oftentimes we're just emailing in our offers to the lender and they're reviewing it. Other times we have to use whatever platform that they use to upload and submit offers and documents. Some of these platforms can be very user-friendly. Some are going to be very complicated. Whatever the lender uses, you want to take some time and actually sit down and learn how their system works so that as you're processing your transactions, they go much faster and much smoother. Also, because they're less emotional in the transaction, you oftentimes are not going to have a lot of verbal communication with the lender. A lot of times it's just going to be done completely by email or messenger within whatever platform you're using. And so oftentimes there's just not a great way for us to communicate the motivation of the buyer or even the complications of a transaction other than by email. The cons to listing REO properties, these are going to be as is sales. The buyers are going to be handling all the repairs with no assistance from the seller. However, from time to time, these REO companies may require you as the listing agent to go in and do some repairs or maintain a property. We had a property once that we received from a bank that had meth contamination, and they had us remediate that property for the methamphetamine. And what that meant is I had to invest $8,700 out of my pocket to do the remediation for the listing. And then we sold that property, we got our compensation, all the receipts got submitted to the lender, and then within 30 days, we received our funds back for all the remediation that had been done to the property for the meth contamination. So I never saw myself as a real estate agent that would ever get good at remediating properties that were stigmatized because of a drug exposure. But unfortunately, we got very, very good at it, and it turned into a good revenue stream for us. Also remember the negative to the REO properties, it's a lengthy approval process and they don't go fast. Also, there's unknown issues because of the limited seller disclosures. The banker lenders never moved into the property. They haven't lived in it. They've never even been inside it, other than what they're looking at from a BPO or an appraisal. And so these buyers need to be very, very cautious on what they're buying, especially if they're not able to get easy access to these properties. I'll never forget, we listed and sold a property once that the copper had been stolen out of the property. There was no furnace, there was no water heater. It was absolutely as is. The buyer couldn't get a loan. They just had to come in and bring cash. Also, you're going to oftentimes have some higher costs. This may include a fee for legal clearances, repairs, or utilities. Also, a lot of these lenders, depending on how they are liquidating the property, there may be a technology fee that they charge to the buyer or a percentage of the purchase price that could oftentimes be anywhere between 5 and 20% of the purchase price. So you just need to know what the bank needs. You need to know what their guidelines are, and you need to communicate that clearly with your buyers and the buyer's agents. Now, with listing and selling bank-owned properties, because of compensation oftentimes that the lenders offer to us as the listing agents is not going to be the same as we may be able to negotiate with a traditional listing or sale. And so whatever they're offering, you may have to accept that. And so one of the things that we definitely suggest, depending on what brokerage you're currently with, is that you move to a set fee brokerage model. I've myself in my career since 2000, I've always been with 100% commission companies. And that way I was either paying a flat fee to my broker per month, or I was paying a transaction fee. And what that did is that helped me determine a cost of sale for my business. It was manageable. And also I was able to keep more of my compensation, and it helped set me apart from my competition because now I was keeping more of my income, and I was able to use that for other things for travel and marketing and acquisition purposes for these types of properties. So the benefits of being with a set fee brokerage, are your higher earnings. You're keeping more of your commission. You're maximizing your profits in the transactions. Again, your cost predictability is there. You have a clear understanding of what your cost of sales and doing business is. You get support and resources, access to tools, training, and technology without sacrificing your income. And then also this gives you scalability because now it allows you to handle multiple REO transactions that are ensuring consistent profitability. One of the things that I also want to mention here is a lot of times when we're listing and selling these bank-owned properties, our end buyers are going to be investors and they are wanting to buy these properties and keep them as rental or income properties. And so associating yourself with a broker that also does property management is crucial. And what's so great about equity, for example, is we can work with an investor buyer. They can purchase a property. We can refer them right over to our property management division, and they will take over and manage the property for our investor clients, which allow them to go out and acquire more properties. So getting REO transactions and making part of that business for you and your income gives you higher volume for your business because you are closing more transactions. A lot of times as a banker, REO agent, it's not uncommon for you to get anywhere between 10 and 100 transactions a year working with not just one bank, but lots of banks. But also, again, that flat fee model gives you the flexibility to reinvest your earning into that marketing and client acquisition. And you can always ask me about our set fee model and how we can help transform your business today after class. But what I want to do is I want to give you some tips and some next steps. Some of these are going to be on the slides, some are not. And so I'm going to grab your pen and notepad. I'm going to give you a couple things that you can do that you can start to develop relationships, but also find a way to get these properties that nobody else can find. One of that is register online with companies that are getting hired by the banks and the servicing companies to go out and take photos of these properties during the pre-foreclosure process. Because a lot of times what will happen is as soon as the letter of intent to accelerate goes out to the property owner, the bank or the REO lender or the PMI company, they will hire somebody to go out and take photos of the property. The reason why they're doing this is they're not even asking for a BPO yet. What they're doing is they just want a picture of the property. And one reason is they want to see the condition of the exterior, but they also want to see if the property is occupied, because if the property is occupied, now they know that they can contact the property owner. They should be getting the certified mail, or maybe it's tenant occupied. And if it's tenant occupied, they need to know how to deal with the tenant for showings and for eviction or a transition after the purchase of the property. So there's a couple companies out there that I'm going to give you that you can register with. And this is a little side hustle money for you because they will actually pay you to go out and take photos of properties. One of them is a company called bpophotoflow.com. That stands for Broker Price Opinion, bpophotoflow.com. And the other one is called Proxy Pix, Proxy Pix, Pics, proxypix.com. You can go to those websites, sign up with them as a vendor. They will pay you to go out and take photos of properties. That could lead you to a potential transaction. Also, there are servicing companies and lenders out there that will allow you to do broker price opinions. They will pay you. Most of the time, it's going to be $85 to $250. It's not a lot of money. Most of the time, this is a loss leader for us where we're doing the work. We're not making any money. We're breaking even, but it's leading us to the transactions down the road. I'll never forget there was one company that we probably did 100 broker price opinions for before we ever got our first listing from that company. But once we got our first listing from that company, the listings just came over and over and over again for 3 years. So stay up to date on foreclosure trends in your area by following industry news and statistics. Again, here I'm going to give you a couple of websites that you can monitor for foreclosure trends in your area. One of those is called housingwire.com. So you can go to housingwire.com and get information there. The other website is called Mortgage Point, excuse me, well, it's called Mortgage Point, but their actual website is themortgagepoint.com. So you can go to those websites and really see what's happening in your market area. You want to build that network for your power team of trusted contractors, inspectors, legal advisors to support your buyers. And then also you're going to want to create a marketing plan that's tailored specifically for your REO properties and streamline your future listings. So right here, this is where you're going to develop your action plan moving forward. We're in a great time of the year. It's January. It's the beginning of 2025. There's a ton of opportunity out there. All of these conferences and events are starting to come up throughout the year. And what you're going to do is you're going to develop an application package to present to the banks and the asset managers. For example, they may want a resume from you. They may want a sale history from you. And also, depending on the lender, they may need you or want you to deposit a certain amount of money with their particular bank in order to get a property with them. So I'll never forget when we started listing properties for Chase Bank. One of Chase Bank's requirements was that I had a Chase Bank bank account, which fortunately that's who I was doing my banking with my real estate business and our real estate company. But for every single REO property they gave us, we had to deposit $5,000 in that account for every single property so that they knew that we had enough money to maintain the property during the foreclosure sale process. So if it's the wintertime, we're paying the utilities. If it's not winterized, if it's the summertime, we're mowing, getting the lawns mowed and maintaining the property. And they just wanted to make sure we had that money available. So think about that. 5 properties meant $25,000 tied up in an account that we didn't have access to. But also those properties that we were getting from the bank were pretty high in listings, and it still paid off in the long run. You're going to join those specific REO forums and groups and exchange tips and resources and build those relationships. I'll never forget, I was at the 5-Star Conference once, and I was having breakfast with the vice president of Bank of America at the time. And I just had a transaction fail with Bank of America. And I got the email while we were at lunch. And all I did was pull up the email and show it to the vice president. And he said, give me 5 minutes. He made a phone call, and I had my transaction approved and my sale moving forward before the end of the day. And everybody's probably heard the term, it's not what you know, it's who you know. And in this case, that's correct. I always ask that question in our classes, and in some cases it's wrong. It's not what you know, it's who knows you. But in this case, it is really sometimes who you know that can move your transactions forward. And then you want to schedule regular follow-ups with asset managers and stay top of mind, especially when you're going to these events and you're networking. If you can get their mailing address after you've had a conversation with them, send them a personal note, send them your business card, include your resume. I'll never forget, over the years, I can't tell you how many of these conferences and workshops that we've been to all over the country where we've taken asset managers to dinner, we played golf with them. We've literally done everything that we've needed to do to stay in front of them, build relationships and trust, and really once you have a great asset manager, and sometimes they'll move from bank to bank. And when they do that, if they know you and they know that you do a great job in your market area and that there's no problems when you list and sell homes and that you're easy to work with, you are going to get more listings. And so one more thing that you can also do is find out who your largest foreclosure attorneys are in your market area. And what you're going to do is simply go to your title companies. Also go to the legal section of your newspaper. Now, most people don't take the newspaper any longer. Because they just don't print them and throw them on the porches anymore, but they are online. It is a requirement with a bank or REO property that they're advertised on the attorney's website, and they're also advertised online in the legal section of public notice, and that is typically in the online newspaper. So just go to the legal section of the local newspaper and scroll through there and really look to see who the larger foreclosure attorneys are. Then go to their websites and start to look and see all the properties on their website. then you can just simply go to the property tax record and the property appraiser websites in your market area and look to see what bank owns that property and then who you can be reaching out to. And of course, there's a lot of local banks and credit unions that you can go to directly. We're not talking about the big boys and girls like Wells Fargo, Bank of America, PHH, Fannie Freddie. Just look at your larger banks and credit unions in your local market and see how you can work with them. Now, a couple of questions that came in today in the chat. One of the questions is this being recorded? And the answer is yes, we are recording the webinar today. It will be posted on our YouTube channel, so you can always go back and watch it. Everybody that registered for today's webinar as well, you are going to be receiving an email from us. We're going to be getting you a copy of this presentation. There's also going to be a link to my calendar there. And in there's a QR code in the top right hand corner of the screen. If you want to scan that QR code, that gives you direct access to me. You can schedule a 15-minute phone call or a 30 or 60-minute one-on-one Zoom meeting with me. We will help you grow your business. We'll answer all your questions. And of course, you can learn more about equity real estate at it'sallinthee.com. And then there's my phone number there, the 801-573-4935. You're welcome to send me an email, give me a call, or schedule on my calendar. And our goal when we do these webinars, we do again a couple a month. They get posted on our YouTube channel. There's all different kinds of topics that we cover. And these are no fluff, straight to the point. This is how to really do it. It's not, we're just going to get you on a webinar, tease you, and then just get you to download something. So equity real estate, we are transparent. We're just looking to work with the best of the best. And we appreciate you taking time out of your day today being here. But also, we're always looking to elevate the skills and the professionalism in our industry. So everybody, again, thanks for joining me today. Go out, be powerful, be productive. And as always, if you need help with anything, we're just a call, text, or a message away. So everybody be safe, and we'll talk to you soon.
Thank you, Randy.